Today, we're going to tackle a pretty dense technical analysis report on Tesla stock. Our mission here is simple: to cut through all the jargon and the noise and really show you what the data is trying to tell us. So let's dive right in. So here's the million-dollar question, right? Is Tesla a clear no-brainer buy right now? Well, this report tries to answer that. But what's fascinating is how the data seems to be in a real tug-of-war with itself. It's not as simple as you might think.
Okay, so before we jump into any predictions about the future, we have to get our feet on solid ground. Let's start with a quick snapshot of where Tesla stock is sitting at this very moment, according to the report's data.
Everything, and I mean everything, in this analysis starts with this one number, $439.31. That was the closing price when this report was written, and it's basically our anchor for everything else we're about to talk about.
And on that particular day, the stock had a pretty good one, moving up almost 2.5%. So right off the bat, you're seeing some positive feelings, some immediate good vibes in the market.
Now, let's put that price into perspective. Over the past year, Tesla stock has bounced between a low and a high. And as you can see, that current price is way, way closer to the high. The report actually calculates it's trading at over 82% of its 52-week range. And what does that tell us? It basically screams strong upward momentum.
And if we zoom out just a little, the report's overview paints a picture of a pretty sustained rally. Now, the key nugget of info, kind of buried in all this text, is that the stock is up around 34% since its lows back in July. And that steady climb, that's really the bedrock for the whole bullish argument we're about to see.
Okay, so with all that in mind, let's look at the first side of this tug of war. We're going to build the case for the bulls, all the technical indicators that are basically flashing a bright green light. All right, first things first, we got to get our heads around this key concept, the moving average. Just think of it as the stock's average price over a certain amount of time. And here's the simple rule. If the current price is trading above that average, traders see that as a really good sign that the trend is heading up. It's a fundamental tool.
And this right here is exactly why the report is so bullish on the trend. I mean, look at this. It doesn't matter how you slice it. Short term, medium term, or long term, Tesla's price is way above its average. And that last one, being almost 30% above its 200-day average, yeah, that is a seriously powerful bullish signal.
So we know the trend is strong. That's clear. But what about its speed? How fast is it moving? Well, the report measures that with something it calls a momentum score. And that score is over 400. Now, you don't need to know the whole scale. Just trust me when I say that is a very, very high number. It tells us the price isn't just drifting higher, it's accelerating upward with some serious force behind it.
So you've got strong trends, you've got powerful momentum. This seems like a total slam dunk, right? Well, not so fast. This is exactly where the plot thickens.
So now, let's flip to the other side of this tug-of-war. Let's look at the cautionary flags. These are the bearish signals that are whispering, hey, things might be getting a little bit overheated here.
So to really get the main warning sign here, we have to talk about this indicator called the MACD. Now, what we're looking for is something specific called a bearish divergence. It's a classic warning sign. Imagine this. The stock price is hitting new highs, but the momentum indicator just isn't keeping up. It's kind of like your car speeding up, but you can hear the engine starting to sputter. Something's not quite right. And the report points to this directly. It highlights that exact MACD bearish divergence, along with another indicator, the RSI, being neutral. But the most important word on this slide is right at the end, exhaustion. It suggests this big rally might be running out of gas.
And here it is, laid out plain and simple. This is the technical tug-of-war at the very heart of this report. On one side, you have the massive push from that incredible momentum and the price being so far above its average. But on the other side, you have the pull from that MACD divergence, warning that the stock might be overbought and just needs to take a breather.
Okay, so you've got this push and this pull, but what does that actually mean for the stock's movement day to day? You know, how wild of a ride should someone really expect? That's where volatility comes in.
This table gives us some really important clues. First, the ADX, which measures how strong the trend is just moderate. But it still has a bullish bias, so it's not a runaway train, but it's still chugging uphill. Now look at the ATR number, almost $19. That tells you that on an average day, you should expect the stock to move about $19, up or down. So the big takeaway? The trend is up, but you better buckle up for a bumpy ride.
All right,
We've seen the bull case, we've seen the bear case, and we've talked about the volatility. So now it's the moment of truth. How in the world does this report take all this conflicting data and actually come up with a final call?
The final recommendation from the analysts is really a careful balancing act. They're weighing that powerful underlying bullish trend against those very clear warning signs that things might be getting tired in the short term.
And here's the verdict. In the short term, think the next 1 to 2 weeks, they're calling it a hold with a bullish bias. Notice that's not an aggressive buy. Because of that MACD warning, they're suggesting it might be smarter to wait for the stock to dip a little before buying. But looking out a little further, in the medium term, say 1 to 3 months, the call is much more confidently bullish. They believe the underlying strength is enough to push the stock up toward that yearly high of $488.
So the big takeaway here isn't a simple yes or no. The verdict is nuanced. The overall picture looks positive, sure, but the report is definitely waving a little yellow flag about the immediate future. It's really a call for patience over impulsiveness.
And that leaves us with one final big question. You see, this whole analysis has been about the technicals, the chart patterns, the data points, and they suggest a sort of cautious optimism. But technicals, they're only half the story. The other half is the fundamentals, the actual business. We're talking earnings reports, delivery numbers, competition. So the question this report leaves us with is, what story will they tell next?